GM, good morning. Welcome to the Milk Road Show, the daily crypto show that yields insights and laughs, compounding daily. I'm your host, Jay Hamilton, and today we're joined by Kyle Reidhead, co-owner and head of research at Milk Road, to talk about his experience from permissionless and a founders-only retreat he was on with some big wigs, some big brains. I'm talking BlackRock, Google, and many more. He's going to share insights from that with you guys, which is really some profound insights that we have not heard very much yet on the show. Kyle, good to have you on.
Jay, it's good to be with you in person.
Yeah.
Okay. That's what I'm happy about.
An in-person show with the two of us. Also, you haven't been on in too long. It's been weeks. So
you guys just excluded me. I don't know.
You guys
what
let us
happened
know.
here.
I know you guys want to hear more Kyle. So let us know in the comments if you guys want more Kyle. We'll make sure we get him on the show on a regular basis for you.
Tell me if you want me. If
Yeah,
not, we'll keep bringing on these amazing guests because they're crushing it right now with the guests.
Okay, Kai, let's just set the context. Tell us who was at this retreat that you were at recently, so everybody listening has an idea of what that was like.
Yeah, so pre-permissionless, ZK Sync actually ran a retreat, let's call it, called ZK Unplugged. And it was a bunch of founders in the space from really, really big companies. I don't want to say all of them, but let's say ZK Sync founder and their team was there. We had Layer Zero. We had a list of big companies. We had a list of big VCs that were there that spend a lot of money and allocate throughout the space, which is always quite interesting. And then they brought some non-crypto native people as well. So this was the CIO of ETFs at BlackRock. Okay. So she's basically runs the entire ETF division at BlackRock, and that division is absolutely massive. They had the head of Web3 strategy at Google. We had some from the crypto sector at JP Morgan and a slew of others. So it was interesting because it wasn't just crypto talk. We had all of our debates on, are meme coins good or not? Is DePIN the next big thing? Should AI and crypto be together? I mean, this is no matter where you go, if you're with crypto people, this is the conversation. But to bring on these others that are, you have the biggest finance company in the world. You have one of the biggest tech companies in the world. And to get their stories of not just how they personally are using or thinking about crypto, but how their entire organization of tens of thousands of people are thinking about and using crypto. That was just really some incredible information that I didn't expect to get, to be honest. I didn't know they were going to be there when I showed up. I actually had very little details. It was just cool, I'll go for a retreat. But it ended up being some incredible insights.
Yeah, and really excited to share some of these insights today, especially BlackRock and Google being such well-recognized brands and brands that are very active, obviously, in crypto, but not brands that we have been able to hear from. So we're going to hear it through your mouth. Start with BlackRock CIO.
Yeah.
What were some of the takeaways that you got from her?
Yeah, so a few things. So first, we actually had a fireside chat with her. She also spoke at the conference. So a lot of what I'm saying is not necessarily hidden secrets or anything. I think she's open to it. So there was a few things she mentioned. The first was the story of the ETFs, which I thought were quite interesting. They had been working on getting this Bitcoin ETF for a long time. They had discussed it for a while. They said there's actually going to be many crypto ETFs to come. So it's not just Bitcoin and ETH. They said right now, that's all it's going to be because that's where the demand is. There isn't demand for others, but she says she sees a world where there's going to be a ton of other ETFs without a doubt. What was really interesting was she talked about the story of when those ETFs went live. If you guys all remember, if you were on crypto Twitter, there was a bit of a circus. I think there was some fake tweets that said that the BlackRock ETF was approved and the price went up 10%, which didn't actually happen. And so Samara actually said, crypto Twitter was interesting and it was actually a really good thing because they didn't have to do any marketing. Usually they have to do a ton of marketing for their ETFs. And they said they actually had to do none because crypto Twitter did it all for them. So that was really interesting. But then she said on the other side, it was also very frustrating. And she thought that crypto Twitter was this very interesting and weird and a bunch of different words she said. She was very scared to come to this retreat that we went to because she knew it was all crypto people. And she wasn't quite sure what to expect. What was good, though, is she said at the end of it, she messaged us all and said, look, I was a little bit nervous because of how weird crypto Twitter is. But meeting all you guys founders, meeting all you VCs and people in the space, I realized it's not how it is on crypto Twitter. It's much more and it's much bigger. And so I thought that was just quite funny that she brought that up. But then she went into just how the success of the ETFs have gone for BlackRock, which was, and some of this you guys have already heard. I know we just had James on the podcast, which was most of the buying of the ETFs, at least of iShares anyway, it's not big institutions by any means. She said that they don't expect that for quite some time. She said basically, although it's available and the pipes are now there for people to buy or companies to buy, they're not recommending them yet and they don't have the approval to do it. And there's a few reasons why. advisors still just need to learn about it. And then secondly, they actually just don't have approval. And because crypto or Bitcoin in general is so risky, I guess, or more volatile, so it's considered a risky asset, they have to get certain approvals from committees. And there's only certain allocations and percentages that these institutions are allowed to actually put into the Bitcoin ETFs. And they don't really have approvals for those yet. And so she said it'll take 6 months to 2 years unless they start to change the rules and the benchmarks. But she's like, even if they did that, committees would have to agree. And that's not an easy thing. She said people aren't fully sold on why Bitcoin or crypto is something that should be in a portfolio. And then she actually talked about, so I'll say a couple more things in ETFs first, and then I'll talk about their investment thesis, which was quite interesting. The other thing that was interesting was she said it's mainly crypto people buying the crypto ETFs. It's mainly people that have never bought an iShares, which is the BlackRock ETFs. It's mainly people that have never bought an iShares ETF before. And so they actually see this as a very powerful tool for BlackRock and iShares in general, because it's almost like a lead magnet. It's like bringing in new people into the iShares world. And so they think that they're going to start to see more people buy this ETF and then go buy others ETFs outside of just the Bitcoin and the crypto one. So, which they didn't expect that. That wasn't a thing that they were thinking was going to happen when they launched. So I think that was pretty cool. And then lastly, I'll just say on their sort of thesis on why Bitcoin ETF, one of the things she said was people tend to bucket Bitcoin as a risk on asset. And what she said is like, I agree that Bitcoin is a risky asset in crypto at large, although she actually sees them as two different things. So we'll talk just Bitcoin first. But she sees Bitcoin as a a risky asset, but she doesn't see it as a risk on asset like most people do. And one of the examples she gave was when there's geopolitical events, oftentimes people go risk off and they move out of their riskier assets. That could be tech stocks, could be crypto, could be whatever. She says one of the things that's interesting about Bitcoin, though, is that because it's the only thing open on Friday nights, Saturdays, Sundays, if a geopolitical event happens then or at night when markets are closed, Bitcoin gets hit the most, right? But what they found is that every time Bitcoin comes back and does so much better, it's the fastest horse. And so she actually doesn't see Bitcoin as a risk on asset because it actually performs much better in risk off times. Like when SVB and some of the US banks were failing, was it last year in 2023, early 2023, Bitcoin did extremely well, right? And so they've noticed that. And that's one of the ways that they are promoting Bitcoin. And they just put out an investment thesis a couple weeks ago, promoting Bitcoin as part of a diversified portfolio. And what she said is, with Ethereum, people see it as a tech play. And so it's hard to get them right away to buy the ETF because if they already have, the NASDAQ or they're holding Apple, Ethereum doesn't give them any additional, at least what she thinks, additional diversification, but Bitcoin does because it's not necessarily a risk on asset and acting the same as like tech stocks do. So that was just an interesting way that I realized that they were kind of thinking about Bitcoin and crypto at large. So a lot of really cool insights. There's a few more. Maybe we'll dive into it. Any questions you have so far?
No, I think the only thing I want to say is I find it very bullish to hear her say that we need to wait 6 to 12 months before, or 6 to 24 months before we can get these like institutions to start open their pipelines more, basically. And this is part of the conversation we had with James was he actually said 3 years was how long he thought it might take. The time is like, it's not fast and it makes sense. These are large banks, large institutions. They take time to push this through. But he said it's basically like there's a wall in that pipe right now and you can't even get through.
Even in BlackRock, it's not fully everyone on board saying we love crypto. We want to use crypto, right? It's getting there. A lot of the things in crypto, they don't agree on. What she did say was tokenization. Of course, we hear Larry Fink talk about this all the time. That's one that the board or the executives do fully agree on, that we think tokenized assets is going to be a big thing. It's why they're playing around with BUIDL already, right? Tokenizing bonds and treasuries. They're doing that. But what she said is that's actually a very small, she called it like extracurricular thing that they're doing at BlackRock. And so that's actually just a test. It's not that big in BlackRock. Most people are not that bullish on BUIDL. And it's a thing where they're doing it. And it's a very small team. I think it was like, I forget the number, so I won't even say it. But it's quite small. And they said basically they're hoping to see some results. And if they do, it'll start to kind of build a flywheel and get more and more things. The one thing that the entire executive does agree on at BlackRock is stablecoins and new rails for payments. And so that was the one thing where they're all in agreement with, which is pretty cool. And I think quite interesting. But my big takeaway from that week, and everyone had to go around and say, what's the one thing you took from this weekend together? And mine was actually something Samara said, which was, you have all these crypto people who are we have these strong values in crypto, right? We want permissionless technology. We want self-custody. And a lot of people, especially the Bitcoiners, are like down with the banks, down with the institutions. Crypto is our way to go bankless. And the thing she said is like, look, I get it. It is a great thing to have self-custody. Like, I understand it, but she's like, the reality is it's just not going to happen. You don't realize, one, how powerful these institutions are, how much money they have, but also just the regulations and the risks they have to take or can't take, sorry. So they can't just go and go all full on crypto. It's just not possible right now. And so if you want to get TradFi on board, which I think we all know and understand that we do need to do, right? Like, one of the ideas of crypto outside of just like custodying your own assets is a new payment rail for how we, use merchants, how we pay for things, how we use stocks, how we do all this stuff. And we need, obviously, the TradFi world on board for that. But she's like, right now we're really butting heads because crypto's so like we're bankless, and then TradFi is so kind of not that. But there is a lot of interest and a lot of incentives that can be aligned if the crypto community and the TradFi community can kind of meet in the middle somewhere. And she kept talking about, what is that middle? How can we get to that middle? And so payment rails was one big thing. Stablecoins is that. But she just said, like, we've got to get our heads out of this like full rogue like crypto ethos and values. Like, she says, I think we'll get there at some point, but it's not in the next year or 5 years or 10 years. It's a long ways away. And so we have to play and be good and make friends with these TradFi teams if we want to really get crypto to make its way into mainstream.
And that's also why we need to educate everybody in our generation on crypto, because we might not be running these institutions today, but we will be in the next 10 to 20 years.
Yes.
What were her thoughts on the election in the US?
Right. This was actually quite interesting that we discussed, and it was actually just kind of a side conversation. But one of the things that her and BlackRock were actually quite concerned about was, and actually they're not putting on as much risk as they could, or I think they're recommending to their whoever it is that they actually hold back on risk right now because they're unsure about what's going to happen with this election. I don't mean who's going to win the election, but if it's actually going to be done fair or not. And if it's not done fair, we're going to have to do these recounts, and it could really extend things out. And if that happens, as we talked about on the show a bunch, markets don't like uncertainty. And so we keep saying, well, the uncertainty is done on November 6th when the election happens. And she's like, I'm not sure that's going to happen. It might be much, much, much longer and prolonged if it happens the way that people are sort of projecting and think it's going to be, whether it's like falsifying votes or whatever it's going to be, whatever gaming these politicians end up doing. And so she's actually quite nervous about that. She brought it up a few times, which I thought was quite interesting. I didn't think it would be such a big deal for them, but she kept saying that was a big issue and a big worry of BlackRock.
And do you think that that obviously is affecting BlackRock and their decision to advise clients to maybe buy the ETF right now, but let's extend that to other institutions?
Yeah. I think it's a concern of not just BlackRock. I think it's a concern of just the TradFi world, the bigger institutions. And so we've always said, like, we probably got to wait for the election to finish. It's just, will it finish November 6th? I hope it does. We have no idea. And it was a thing she continued to bring up.
Two other points that I want to touch on that you shared with me before we started recording is she has a son. And she has lots of thoughts on the younger generation and their views on crypto.
Yeah, this was actually a conversation that she brought up, but then a bunch of us had throughout the retreat, which was younger kids are becoming more and more financialized. They're getting interested in investing much, much, much earlier. I think her son was like still a teenager, 17 or something like that, already getting interested in trading. And she thought that was a great thing, right? Of course, like, I'm going to let him do whatever. If he makes mistakes, does his thing. But the interesting thing she said is, I think the way that he's going to invest is based on the people he follows on Twitter. Right? Or sorry, on TikTok.
Not on Twitter. Not on Twitter, probably.
And so I was talking about this with a few others at the retreat as well, which was like, first we were saying there's not a lot of people that really invest in the world. Like, if you like in the grand scheme of things, there's not that many. However, it is getting more and more and more. And I think it's why we're seeing things like Polymarket and gambling and sports betting and all these things becoming more and more popular in the world. And I think a lot of this is happening because the younger generation, it's more normal for them. They're really getting in. I think it's because of social media probably, but they're getting into, let's say, betting, they're getting into investing. And I think that's good. I think that you want to start taking control of your money at a young age, but this is also what changes the dynamics over time is as this younger crowd comes and becomes a bigger part of the investing world, that's going to really change markets. She said, since she's been in markets for many years, I think she said 25 years, she said since 2008, markets have changed a ton since the great financial crisis, right? So obviously that was a big thing. And then she said social media and now crypto are really going to change the dynamics of finance. And so she's, one, excited about it. Two, she's a little bit concerned and worried about it. Probably just as a parent, you're going to be a little bit scared. But I think overall, more and more people are becoming interested in investing. And I think that's a good thing. And crypto, I think, enables that even further.
For sure. And you mentioned 2008 being a key milestone for markets. What does BlackRock think about using historical data before 2008 versus?
I mean, her opinion was just like, I'm unsure how valuable data is pre 2008. I don't think it's a BlackRock, or it might not be a BlackRock opinion. I don't know, but it was just an interesting take that she's like, things are changing now so fast that it's really hard to look at the way things used to be, because she's like, markets are just so different than what they used to be. And I mean, as AI comes in, it's going to get even more. And it's going to be a very, very hard thing for, I think, the older generation to keep ahead of and keep their eye on. So anyway, it's going to be a crazy world out there. That's for sure.
Okay. Let's shift from one of the biggest financial institutions in the world, I mean, the biggest asset manager in the world, to one of the biggest tech companies in the world, Google, who is also at this retreat. What is going on at Google?
Yeah, it's interesting.
Blockchain.
You know, we hear PayPal getting into crypto, Stripe getting into crypto, and a lot of these sort of fintech companies getting into crypto, but we don't hear a lot of the like bigger tech companies, the Amazon, who was supposed to, but then backed out, Apple, etc. But Google, as sort of an infrastructure and a data company, is actually doing so much behind the scenes for crypto that I did not realize. And I thought it was quite interesting. We were actually having breakfast, and the guy from Google, I won't mention any names, but was just talking about some things, and he said a few things, and I kind of sat there and I was like, wait, did he just say that? And like the conversation started moving to something else. And I was like, hold on, everyone at the table, can we just circle back? Did you just say that? And so there's some pretty interesting things. We'll talk about a few of them. The one thing Google wanted to do first was data, right? And so they wanted, and there's so much data on chain. And so immediately, the first thing they did when they set up their sort of like crypto or Web3 sector in their company was they wanted to run validators for blockchain so they could actually get data. And so the first thing that they did was say, hey, we need to buy X amount of ETH to run X amount of validators, okay? And so they own Ethereum to run some validators. Then they did the same thing with Solana. They did the same thing with Aptos, I believe Sui, and a bunch of others, okay? So there's a whole list of crypto that Google actually holds on their balance sheet. Now, they don't disclose it because it's not big enough yet, so they don't need to. But what's interesting is they are validating, which means they're earning rewards monthly, and they're not selling it. And so that was one quite interesting. That allows them to do a bunch of things. They're building some products with that. And doing some cool, like kind of back-end stuff. They built like RPCs and things that I think most of our audience doesn't really care about. But anyway, they are pushing the industry forward on the back-end stuff for developers and things. So I thought that was cool. But then we got to talking again about stablecoins, right? This seems to be the use case for all of them. And Google is obviously very global. So they have clients from all over, okay? Many clients that are also in crypto, and again, from many different countries. And they always have this problem, at least their treasury and payroll department, of the risk around currencies, right? You think they do a bunch of business in Argentina, but Argentina, the peso inflates at 200%, okay? So companies like Google, what they do is they either have to buy at, like in Argentina, for example, it's hard to get dollars. You actually can't in many cases as a business. And so what they do, and Michael Saylor's talked about this, is they'll buy things like real estate to hedge their currency risk. Let's just say a client pays them, I don't know, $20 million in pesos. Well, if they just hold on to that 20 million is going to be worth 10 million very quickly, right? And so instead they'll buy like a corporate building, and that's what they do. And then they buy and sell real estate because it at least holds value. I mean, Michael Saylor, one of the reasons he started doing this was he had a business in Argentina and he had all this money, it's like $100 million. He couldn't get it out when it started collapsing. And so he bought a yacht. I remember him telling this story and I was like, what the heck? But Google, actually interesting, is doing somewhat of the same, and they just have to. There's not really a choice. And so the crypto team started saying, let's start using stablecoins, right? And obviously it's not a thing that just like happens. The guy that's in at Google that's been in crypto, he's been in for forever, and he's been at Google for a while. He's been telling them they need to get in crypto, and it's slow. It's tough. These institutions are huge. There's tens of thousands of employees, just like BlackRock. They've heard about it for a while. They've been watching it, but it took so long to really get into it. The same is true with Google, but just recently they've started to allow customers, and this is public knowledge, so they've started to allow customers to pay in stablecoins. Coinbase is the first one to pay in a stablecoin. And so Coinbase currently is paying for whatever it is that they're working with Google on in stablecoins. And what the team, the treasury team is realizing is like, this is the solution to when you have customers in Argentina or in Turkey or in wherever else there's currencies that are inflating. And they're realizing this very quickly. And they realize that it's cheap, it's fast, it's easy. They don't have to worry and hedge risk. It's a whole different world. Like you think about buying real estate, which is not a thing that's very liquid and easy to do and takes a lot of people, very expensive in terms of fees, to just using a stablecoin, and it completely changes it. And so they've started it with one. I think they now have their second customer, which everyone would know, but I won't say the name, who's now paying in stablecoins. And they think that this is a thing they're going to be doing more and more and more. And so basically what he said to me was like, look, I can't get everyone at Google to agree and just go all in on crypto. But if I slowly start to do things, he's like, for example, when we started to run the Solana validator, that was when Solana was around $8. Now Solana is at 100 and whatever. He's like, do you think that someone in Google noticed that their balance sheet just went up X amount? Now it's not a significant amount to what, you know, Google's balance sheet really is, but it's enough that people are like, whoa, that's kind of crazy, right? And then same with the stablecoins thing, where like it's just slow. It's not a big part of their business at all. It's a tiny, tiny little bit. But it's teaching these people in the treasury about this idea that stablecoins exist, and it's a way better way to run a business in terms of their finances. And so he's like, we're like slowly kind of like building our web throughout the Google world. He's like, more and more of the developers and the people in there starting to understand it. More and more of the like executive team is starting to understand the benefits of it. And he's like, it's only a matter of time until this like this flywheel just really starts to take off. And it's like, you know, slowly, then what is it, gradually, then all at once or whatever. Yeah. And he's like, same idea with Google. And I think Samara was kind of saying the same idea with BlackRock, which is quite exciting.
Very exciting. One more that you spoke to that I want to touch on is one that is kind of polarizing for crypto is JP Morgan. Jamie Dimon, head of JP Morgan, has been historically not so positive towards crypto.
Yeah.
But at the same time, JP Morgan is actually quite active.
JP Morgan has the largest crypto team of every bank in the entire world. They are at, they said several hundred. So I had somewhere between like 200 and 300 employees that are on their crypto team.
Whoa.
And I mean, everyone's heard of the JP Morgan coin, or some people have, and they have this chain, and look, it's a permission. It's basically, they copied Ethereum. This is back in like 2017 or something. They copied Ethereum. They launched this like this token or this JPM coin. It's basically like a stable coin, and it's permission. No one can use it, like except for them. And so it's private. It's like people don't love it, but it did actually provide a really good service for their infrastructure and for like their banking partners, et cetera. It's like it works for them. They are actually looking to level that up now. And they're looking at, is it going to be a layer 2? Is it going to be something else? They're trying to figure out what is the next step for them. So that's quite interesting. But then they just have a team of 200-300 people that are building products for other institutions, for other banks, doing a ton of stuff. And it's actually, I guess, a very, very impressive team. And so you have Jamie Dimon on one end saying, he didn't say crypto's trash, but he basically said Bitcoin is a pet rock. Although I would say Jamie Dimon did say he thinks there's a future for crypto. He just doesn't think there is for Bitcoin, which is kind of funny. But their team is massive. And from the people I spoke, I met multiple people from JP Morgan. He said they're actually an incredible team. They're very smart. They really get crypto. Now, they're not building products for you and I. They're not for crypto natives. They're doing it for the institutional world. But still, that's teaching them. That's bringing them on chain. And I think it's doing a lot for the crypto space as well. So that was kind of a shock to me, to be honest. But again, another massive institution that takes this seriously, right? One of the interesting things that I learned from some of the guys that we were talking to, whether it's Google, et cetera, was almost every institution in the world and every bank is actually building in crypto right now. They all have a crypto team. The problem is that many of them don't have a P&L with that team, meaning it doesn't matter if they actually make money or not. It's one of those back corner teams that are like innovators, or they're like the research and development teams. And it doesn't matter how much they spend. It doesn't matter if they make any money. It's kind of like Amazon did this. Amazon was supposed to launch a marketplace. We all heard about it, like, was it last year, 2 years ago, but it wasn't a team with a P&L. So they never had to actually launch. Whereas the teams at BlackRock, the teams at Google, they have a real P&L, which means they have to actually succeed. They have to launch. They can't just like let it fizzle out. They've got to launch it. They've got to keep iterating on it. JP Morgan doing the same. And hopefully more and more institutions will start doing that, because right now they are all building, they are all testing. And I think what they're waiting for is just regulation. Once I think regulation kind of like gets clear in the US specifically, then I think they'll start to give P&Ls to their teams, and you'll start to see these banks, institutions building real products and doing real stuff. I think that's going to be really cool. I think a lot of it's going to be about stablecoins in the early days. And that's why we're seeing how many institutions right now launching stablecoins already. So it seems like that is just so obvious that that's going to be a massive, massive wave. And it's coming soon, or it's already starting, I'd say.
It's incredible. We've talked so much recently about institutional demand for buying crypto assets. And we talked about how that institutional demand is growing very slowly. But what you're talking about here is also the major enterprises, the biggest companies in the world, whether they be finance companies or just tech companies like Google, are also experimenting and building. We just don't know it yet.
The most bullish thing that can happen right now, like last cycle, we had the Teslas put it on their balance sheet. We had Michael Saylor, whoever else. And that's great. That's cool. But it's kind of short term and it doesn't do much more than that. Right. Whereas now you have Google, JP Morgan, et cetera, starting to build business cases and use cases for crypto, saying and showing Coinbase is probably the leader in this, right? Moving a lot of their stuff on chain, saying that, look, we are saving this much on operating costs by using crypto. We are saving this much on our FX costs, right? By using crypto. And the more that we can start to not just do that, but then show people on their teams and other teams that this is real and it works and it's possible and it's not that hard. In fact, it's actually much easier than trying to figure out the TradFi rails and how all that financial system works. That to me is super bullish because it means we're ingraining crypto in institutions. It's not just a speculative thing. It's a thing that we really use because it makes our businesses better, more profitable, because that's what all these institutions want. Yes, they want to speculate, sure. What they really want is they want to save money. And if they can save money on transactions and moving money around, they're all going to do it. And so if Google can be a leader here to show them that this is possible, or Coinbase can, or many of the others, PayPal, that's going to proliferate really, really fast.
Yeah. It's just, I mean, bullish times all around. Bullish times all around.
Markets, maybe not, but at least
Not
behind
yet.
the scenes, it was I left that retreat. It was like, oh my God, we are not bullish enough. You know, I was like, get me on this podcast. We are not bullish enough.
Well, we appreciate you joining us today, Kai. Everybody listening in, I got to remind you that we are on the road to 10,000 subscribers on YouTube right now, and we need your help. So make sure you hit that subscribe button on YouTube, and you could win a bunch of free prizes, including our crypto investing masterclass, which is 6 hours with Kyle himself, giving you the step-by-steps of what you need to do to create your portfolio, succeed, and build wealth for you and your family that'll change your life. Thanks so much for listening in, everybody. Have a wicked awesome day. As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your #1 resource to help you invest successfully in crypto. One final note, this show is for educational purposes only, and nothing we say is financial advice. Investing in crypto or any asset is risky, and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.